The Little Book of Common Sense Investing, by John C. Bogle, is a concise and insightful guide that advocates for a straightforward and rational approach to investing in the stock market. Bogle, the founder of Vanguard Group and a pioneer in index fund investing, presents his case for why individual investors should embrace a passive investment strategy. The book emphasizes the importance of low-cost, broadly diversified index funds as the foundation of a successful investment portfolio. Bogle argues that actively managed funds often come with high fees and fail to consistently outperform the market over the long term. He asserts that the pursuit of market-beating returns through active trading and fund selection is often counterproductive and leads to poor results. Chapter 1: The Paradox. Bogle starts by addressing the paradox of investing. He highlights that while the stock market represents a great opportunity for individuals to accumulate wealth, the average investor often doesn't see the returns that the market itself delivers due to fees, taxes, and poor decision-making. He introduces the concept of the relentless rules of humble arithmetic, which refers to the fact that the market's average return is not captured by most investors. Chapter 2: Rational Exuberance. In this chapter, Bogle discusses the phenomenon of irrational exuberance, where investors become overly optimistic about the potential of the market or certain investments. He emphasizes the importance of maintaining rationality and avoiding the temptation to chase after hot trends or fads. Bogle introduces the idea that markets are efficient in the long run, and attempts to outsmart the market through active management often lead to disappointment. Chapter 3: Cast Your Lot with Business. Bogle advocates for a focus on the fundamentals of investing, owning a piece of a business. He stresses the importance of thinking like a business owner rather than a trader, and he encourages readers to invest with a long-term perspective. Bogle argues that the stock market represents ownership in real companies that generate earnings over time, and the goal should be to participate in that growth rather than engaging in short-term speculation. Chapter 4: How Most Investors Turn a Winner's Game into a Loser's Game. Bogle introduces the concept of a winner's game and a loser's game in investing. A winner's game involves activities like tennis, where the outcome is determined by the skill of the players. On the other hand, a loser's game involves activities like amateur tennis, where the outcome is more determined by avoiding mistakes. Bogle argues that active investing is a loser's game due to the high costs, fees, and competition, making it difficult to consistently beat the market. Chapter 5: The Grand Illusion. Bogle delves into the illusion that professional fund managers can consistently outperform the market. He presents data showing that the majority of actively managed funds fail to beat their benchmarks over the long term. Even if some funds do outperform in one period, the odds of them repeating that success are slim. Bogle also emphasizes the impact of costs, which are a major factor in the underperformance of actively managed funds. Chapter 6: Taxes Are Costs, Too. This chapter focuses on the impact of taxes on investment returns. Bogle explains how the turnover of assets in actively managed funds generates capital gains, which are taxed and reduce an investor's net return. He contrasts this with index funds, which have lower turnover and thus generate fewer taxable events. Bogle advocates for tax-efficient investing and highlights how minimizing taxes can significantly enhance an investor's net returns. Chapter 7: The Grand Strategy for the Average Investor. Bogle outlines the grand strategy for the average investor, adopting a low-cost, passive investment approach. He recommends investing in low-cost index funds that provide broad market exposure. Bogle discusses the merits of both stock and bond index funds, and he emphasizes the importance of diversification to reduce risk. Chapter 8: Seeking Advice to Select Funds. In this chapter, Bogle provides guidance on seeking financial advice. He suggests that investors should seek advice that is fiduciary in nature, meaning it is in the best interest of the investor. Bogle warns against advisors who are compensated through commissions, as they might not have the investor's best interests at heart. Chapter 9: On Selecting Managers and Funds. Bogle provides a checklist for investors who still wish to select actively managed funds or managers. He stresses the importance of consistency in performance, low expenses, and management with a long tenure at the fund. Bogle acknowledges that some actively managed funds might perform well in certain periods, but he remains skeptical of their ability to consistently beat the market. Chapter 10: On Performance Chasing and Market Timing. Bogle discusses the pitfalls of performance chasing and market timing. He argues that investors often buy into funds that have recently performed well, only to find that past performance is not indicative of future results. He also highlights that trying to time the market by moving in and out of investments is fraught with risks and rarely successful. Chapter 11. Do-it-yourself investing, simple but not easy. In the final chapter, Bogle addresses the challenge of do-it-yourself, DIY, investing. He acknowledges that while the principles of index fund investing are simple, executing them consistently can be psychologically difficult. Bogle encourages investors to stick to their plan, avoid emotional decision-making, and stay committed to the long-term strategy. In The Little Book of Common Sense Investing, John C. Bogle presents a compelling case for the merits of passive investing through low-cost index funds. He emphasizes the importance of keeping investing simple, focusing on long-term ownership of businesses, and avoiding the pitfalls of high fees, taxes, and active management. Bogle's insights provide readers with a practical and rational approach to building wealth over time.
As we conclude the summary of this captivating book, we've delved deep into its intricate characters, heart-pounding plot twists, and thought-provoking themes. The journey through these pages has been nothing short of remarkable. But remember, this is just a glimpse into the rich tapestry that the complete book offers. To fully immerse yourself in the author's world and experience every emotion, every revelation, I encourage you to pick up a copy of the book and embark on the full adventure. And if you've enjoyed this summary and crave more literary insights, thought-provoking discussions, and exciting book-related content, don't forget to subscribe to our channel. By subscribing, you'll ensure you never miss out on our latest explorations of literature's hidden gems and popular favorites. Thank you for joining us on this journey, and we look forward to sharing more captivating stories with you. Subscribe now and let the exploration continue.